Welcome to another episode of the Wealth Building Strategies Podcast. I'm your host, Jeremy Constantino, and today I'm joined with our other co-host, Tony Preston, to discuss investing into land and land development projects. Tony, nice to see you.
It's great seeing you too, Jeremy.
You look great with the coat on.
Yeah, I'm adulting today.
You're adulting.
Yeah.
Excellent. So for those of you that are listening that don't know Tony Preston, he's the managing partner at our JPAR Vantage real estate brokerage based out of Phoenix, in which he's managing a fully integrated commercial real estate brokerage that service all aspects of residential and commercial real estate across the nation. So we have agents that serve across the nation. Their Vantage, we have over 50 real estate brokers and agents. What more than half are focused and dedicated on commercial real estate. Is that correct?
Correct. Yeah, that's correct. And we're growing. We just signed on a new team member yesterday. So I'm excited to do that. We're trying to build out agents that are going to be focusing on all the different disciplines in commercial real estate. So I'm excited to add into our retail, restaurant, and bar group. So we currently have 3 members that are focusing strictly on those types of establishments. So we're growing. So that's awesome.
Excellent. Yeah. So if you're out there listening and you're an agent or considering even maybe getting in commercial real estate as an agent, reach out to Tony. So we'll put a link to get in contact with Tony in the show notes. So click on the link below if you're looking to get into commercial real estate on the brokerage side. And then also, if you're an active investor and you have properties that need to be managed, because we got a property management division as well. So need properties that need to be managed, reach out to Tony. If you got properties that need to be listed, or if you're looking to actively buy, reach out to Tony. We can take care of you. A little bit more about Tony. You got over 25 years of real estate experience. And I think you've negotiated, managed over $1 billion in closed real estate transactions. So you've had a successful career, and I think you come even from a third generations of commercial real estate family. So nice to have you on the show again, Tony.
Yeah, it's always fun talking real estate. It's not like I do it enough every day. So why not dedicate however much time we have here today to discuss investing and growing your wealth in real estate. So
right, and that's the whole genesis for this podcast, because when we talked, you and I, we discovered really what our why is and who we really are, and that really is a passion to educate others into investing in real estate so that they can build, grow, and sustain their wealth. So here we are.
Yeah, I think it's important to add too is that that is our overall philosophy as a company in general. So even our practitioners, we want them to be investing in real estate. And there's a statistic that went out not too long ago that just blew my mind, that most people that work within the real estate industry don't even invest into real estate outside of their own primary residence. So, most wealth in this world is developed and grown through real estate, and it's transferable wealth. It's something that you can leave on to other family members. It's why practitioners aren't invested into real estate is beyond me, and I think that's also what brings a unique approach to us, is that we're coming in as investors ourselves. We're not trying to just make a commission. We're trying to build a long-term relationship with every client that we meet and that we engage with, because ultimately it's our objective is to help them reach theirs, which I think all of us get up every day to try and make a living, to support our family, whatever that is. And we're always trying to look to grow wealth somehow, some way. And why not take our unique knowledge that we have and help people achieve those goals? So that's the exciting part of what we're doing.
Yeah, I'm glad you brought up the fact that the real estate professionals themselves, it's unfortunate that they're not investing as much as they could be. They may be busy focusing on building their business, their sales business.
Yeah.
Or maybe they just don't think they have the knowledge. But I think it maybe comes down to the time, and maybe they just don't know of passive investing deals that are out there, and that's the reason for us educating. So excellent. So yeah, today let's talk about land and land development, and we're considering this part of the commercial division,
Mm-hmm.
and so I recently just put together the ebook, and I have it. It's live, and so if the listeners haven't gotten my ebook called "Diversifying Your Real Estate Investment," so put the link in the show notes. So click on that so you can download and request a copy. And in there, we discuss the different asset classes and different types of asset classes in commercial real estate. And so I kind of grouped it into three groups. We have multifamily is one
Mm-hmm.
group. We have and I've grouped it, called business CRE. So that's office, retail, industrial, flex, hospitality, kind of grouped all those together. And
Mm-hmm.
then the third group, land and land development.
Mm-hmm.
So Tony, let's talk about land and land development in this type of asset class. And I guess just to start out with, what is in this group, and what is in when we say land and land development, what are we talking about?
So land and land development is very encompassing, because it's not just about buying a parcel of dirt. It's what to do with that dirt. Or in some cases, you're buying it as an investment, and how do I improve the value of that investment? And so that's where the land development comes in. And that doesn't necessarily mean that you're going to do any kind of construction. It could be all administrative, right? So there's a lot of different ways of adding value. And one of the things that I've learned over the course of my career in real estate is land is also one of those things that's really difficult to sell, because there's no imagination. Most people don't have imagination that can see what are the possibilities with this piece of dirt. We drive by pieces of dirt every day on our commutes or wherever. We see those vacant lots and we don't think much of it. It takes someone to kind of put together an idea of what the possibilities are. And then from there, if someone sees an idea, what we found is people bring in their own imagination into that and say, well, hey, that's fantastic. I would love to do this there. I didn't know that was possible. So that's the piece of with land is, it's not just dirt, right? There's something that could be applicable use to that, and could be extremely valuable to someone else that might be looking for that just, we just don't see it, just because we pass it every day. We don't think about it.
I love that you jumped right on in and easily addressed one of the objections, and one of the possible downsides or disadvantages of investing in land is that it could take a significant amount of time to sell those. And you hit the nail on the head. You can get around that by providing a vision and an idea of what that land could be. And so yeah, we're about to partner with an operator in Oklahoma, Arkansas, that is doing that. And all he is doing is some minimal clearing of some trees to show potential buyers that, oh, there could possibly be a house there. So very little. It's just a clearing of some trees gives somebody an idea in their head that, oh, there's possibility here.
Well, and it also shows that there's activity, and activity is always going to spark someone's interest in, oh, what's going in there? So anytime you can have activity on a piece of dirt, that also spurs another level of interest with people that might never have been interested in that parcel ever before.
Yep. Yeah. The creating the idea in somebody's mind on a piece of land is analogous to when I've been doing real estate investing on single family homes and really developing those. We strip them down to the studs and completely renovate them. And what you have is this, in concept, you can be like, hey, I'm selling this property to a potential buyer, like a spec home. But what happens is when those potential buyers walk in and they see nothing but studs, it's very difficult to say, well, why am I going to be putting up $1 million for some studs? And it's very, very difficult unless you have that unless you show them the high quality granite and the quartz and the luxury finish out, they don't see that.
Yep.
But looking at the stuff, so it's the same thing with land. You just see some dirt.
Yeah, I think just in general, we buy with our senses. So our smell, touch, just what it makes it feel, how we feel inside. And fortunately and unfortunately, dirt provides that, where it's hard to have an imagination for it. And until you can visualize what the possibilities of that raw piece of dirt is, I'll take in a project that we worked on that it had been on the market for years and years and years. And it was a commercial zone property. And we looked at it, and we looked at what was going on around there. And we determined that, you know what, there's over 1 million square feet of vacant commercial property in that area. The likelihood of someone coming in there and doing a commercial development is very low. Because we spun it all different ways. You can go medical here, you can go office, and all these different things. And so we went and met with the city, and we asked within their general plan, what do they envision in this area? What are they looking for? What are some of the challenges that they're faced with? In this particular area had a demographic issue. So we had a very aging population, which is not good for a city that is trying to recruit companies to come in there and start operating, because they'll look at the demographics and say, I have an aging population here that's not going to support the people that we're trying to hire that are going to work here. So it makes it difficult for the cities to recruit the people in. So what we did is we said, well, hey, can we go with a high density residential product here? And they just, yes, it fits within our general plan. And so we went to that whole zone change, and we doubled the value of the property by doing that. Ultimately, we didn't end up completing that. We were going to go into full development and build the project out. We ended up selling it to a multifamily group because they had the density that they needed in order to get the amount of doors that they could put onto site. So, it's just those little things that you can add a lot of value, just kind of rethinking what the possibilities of that. And then once you do that, someone else is going to bring their imagination into it if you're going to sell it. Or you can go forward with a project and go into completion of it. So go vertical.
Yeah, I could consider that an advantage for my sake, is that there's the variety of exit strategies in land is infinite, and it's all based on the creativity and the imagination of the developer.
Yeah, I mean, let's face it, a lot of smart investors, some people might look at them and say, well, wow, they're lucky. But when people put a strategy in place to obtain the objectives that they're looking to, and it's mainly just to grow wealth to a certain extent, right? But there's people that if you go about it and you have a plan of how you're going to go and build your wealth through land, once you have that recipe set up, and then it's just a rinse and repeat. Then I sell that and I move on to the next one. I do the same thing, rinse and repeat. And I might, start going in and getting into bigger investments or doing bigger things as I grow my wealth. And that's the whole progression of how you do this. But there's the one thing about land that is the possibilities are infinite. The strategies are, there's so many different strategies, whether you're doing land banking. So you're just buying land, and instead of having your money in a bank, you have it in land, and you're just going to go through a period of time, and that value will accumulate year over year over year to a certain point where it could be, it's outside the metro area. And so, but we know where the future plan of growth is going. And so I'm gonna land bank in that area, and I'm just gonna buy a bunch of dirt out there that I can get inexpensively. And then as development starts creeping my way, well, now I can go ahead and sell that property. And then there's even strategies on when you sell it. You can carry the property. Some other developers can come in with some big grandiose idea. I had one client that in the course of, I think it was about an 8-year period of time, we sold the property, we carried the note, and the note was defaulted on several times, but ultimately we took the property back, resold it for double the amount every time we took the property back.
Wow.
So they turned that property into, just by doing that, they sold it, I think 3 or 4 times for double the amount each time.
Wow.
In that course of like an 8-year period of time is something phenomenal.
Yeah, and the stories that I'm hearing, and even in our partnership that we have there in Oklahoma, the coming up, you know, he's buying acreages at $2,500 an acre and selling them for $20,000 an acre. And you hear stories like this time and time again of developers, you know, 10xing their returns. So in all the different commercial real estate asset classes, land can be the highest performing return on investment by far compared to all the different ones.
And I think a lot of the reason why a lot of people don't do it is because they don't understand. And let's face it, there is some complexity that's involved with this when you're going through administrative processes. There is some capital expenditures, there's time, there might be attorneys involved if you're doing zoning changes, and if you're trying to bring utilities over to the property. I mean, those things can be expensive, but it's when you look at it respectively over the course of your investment, by bringing in the infrastructure that's going to support development, that's where you're really going to make most of your money. And in some cases, the infrastructure might be there close by, and now we're just doing simple lot splits. And with those lot splits, that's where I'm going to like the case in point in Oklahoma is you're going to add value to the property just by simply creating smaller lots that people can buy. Instead of being able to having to buy 96 acres, they could buy 2.
Right. Going back to what you're saying about land banking and how investing into grass and dirt is a safe investment over time. And what we're seeing is in my book, I have the data to show over time that the price of the land and the value of the land does not fluctuate as much as single family residence or maybe even retail office space, and way less fluctuations than obviously the stock market. So very, very low change, very low volatility in a appreciating asset, which is the dirt in the ground, over time with very, very minimal expenses. No property management, there's no people, there's nothing going on over time. So very little overhead and management, but a very safe place to invest, which attracts me. The safety does and the low risk, but then you combine it with the potential upside.
Yeah, I think where we've seen most people get in trouble with the fluctuations of land value, because it does fluctuate. As the market is, if you're in an area where growth has not reached its full potential out there, and so you're doing more of a speculative buy, you want to have a strategy in place and a hold strategy, understanding that it might take time. During the whole boom and bust in probably about 2006, there's a lot of landowners that got hurt in that process because they did some speculative buys. Development was going out there. We thought that, this was never going to end. And then when the market crashed, they got stuck holding land at a high premium value. And then if, you're trying to, you think about it from like a builder's perspective, it has to make dollars and cents for them. And land is where is a portion of how they're going to make their profit, right? They have to have that land sit in a certain window from a value perspective on a per lot basis of how they're going to reach their profitability. So, and you have to take in kind of consideration of all those different factors, because that's where the true fluctuation, you never lose money in dirt. It's just it's always based off of time. And you have to kind of build that timeline into your strategy. So if it's a speculative, like a quick flip type thing, you're more susceptible to market shifts and changes versus if you have a long-term strategy on something, it's usually a safer bet for you.
Yep. Another advantage that we haven't really touched on is sometimes on these land deals and land investing, for the most part, the buying of the land is done with cash and very little third-party bank financing, which that takes away the risk of defaulting on your loan.
Yeah, a lot of, there's not a tremendous amount of lenders out there that are going to land on raw dirt, because yes, they can secure it with the dirt itself, but there's no physical building, there's no business operating, there's no source of revenue coming in from it. Most cases, you could have agricultural, right? So it's revenue producing, you can lease out your land. You can have land where, is again goes into agricultural world where it's feed, people that are running cattle and so forth might utilize your land and have a land lease in place to have access for feed for their cattle. But I'm not sure exactly where I was going with that, but yeah, it's there's infinite opportunity with it. I guess kind of, and there's so many different nuances that you just have to have. I go back to, you have to have a good strategy in place on what you're going to do with that property, and time should be a factor into that.
Excellent.
Sorry, I lost my train of thought.
Yeah, we're just talking about the lenders, and that or an investor perspective.
I needed you to prompt me on that, Jeremy.
You were on a roll.
I was stuck there. My mind went blank. I mean, yeah. So there's not lenders that lend on land traditionally. So yes, you're either paying all cash or you're going to have some kind of seller financing that's involved.
Right. Yep. And so that could be attractive for an investor that does not, or that may be worried about what the Fed is doing in these times. We're seeing high interest rates and we're seeing returns go down. Well, we can avoid that whole question by purchasing proper in cash, that's normally what they do with land. So I guess let's kind of wrap up here, and what would be kind of your tips and I guess advice? Well, there's two types of different investors out there. There's the investor that doesn't want to work at all and that wants to invest passively in something like this. But then there's developers out there that want to start getting into developing and want to. So I guess let's look at the developer side, somebody that's wanting to get in developing. I guess what would be some of your advice to just getting started?
So my advice on that is start building your team. We've been at this for a very long time. So we've been able to establish really key team players that we utilize in the development process. When you're dealing with an administrative and you're dealing with municipalities, there's a legal aspect that's involved in there. And so we have people that do our presentations, for example, that go out and do presentations in front of the city council, that will hold our neighborhood meetings if we're going through a zoning change or whatever the case might be, that work with the planning on. There's a lot of negotiation that goes back and forth during this whole process. The city wants something and we want something, and then we have to negotiate how we make it both work for both parties. You're going to have architects and so forth, and you're going to have surveyors, and you're going to have engineering done, right? So you need to know all these different things. You need to know the floodplains, and then more importantly, if you're working within a county or a municipality, is you want to start developing relationships with those individuals that oversee the zoning and planning of things. Have a good understanding what's going on with their planning. Every municipality, I think, is required, well, at least out here in Arizona, in other markets, are required to have a general plan in place. And so they have their current zoning, and then they have what could be in the future. Understand the different redevelopment zones and the benefits that you get with that. Sometimes you get tax incentives right, to improve property. So understanding all those there's a lot of different nuances. And so you kind of have to start building your team. It's not necessarily just getting a realtor to help you, because not oftentimes a realtor will understand that whole nuance that it takes in order to achieve these objectives. So, it's just really building that team that is going to help you become successful in what you're doing.
That's fantastic. Fantastic advice. Getting into land development, build your team, and going from if that developer was already investing in single family homes or multifamily, yeah, they may feel like they can do it all themselves, and they may have a construction crew that they're managing, but yeah, there's a lot more complexity, and yes, a lot more networking and a lot more to manage on the building your team.
The other aspect I would take a look at too as well in your consideration and your plan as you have your team develop is you want to try to mitigate as much risk as possible. So how you mitigate that risk is, you understand who the buyer of your product is going to be at the end of the day, and you're going to develop to that end user of that product.
Yes.
And so that's going to help you mitigate your risk, because now if I understand who my buyer pool is, I know who to go to sell this property once I get it to a certain stage.
Fantastic. Okay, switching gears now, what would be your advice to somebody that maybe has a full-time job or retired, and they're not in real estate at all, but they want to start investing into land development passively, so putting the money in? What advice would you have to say to somebody that is looking to invest $100,000, $50,000, hands off? What would be your advice to them?
So what I know from my experience and where people have gotten really hurt in investing in passively is they invest in someone that has a dream, and it could be a pipe dream, and understanding that this pipe dream might sound great and grandiose. When I first got into this business, when I was 19, 20 years old, I spent a lot of time with this one developer that was going to bring in a Disneyland to Arizona. And I'm all on this, and I spent a lot of time. We talked to investors, and at the end of the day, it was just a pipe dream. And there was no true plan in place. There was no supporting cast that was going to be able to support that type of development. Yes, the city's got excited about it because, why wouldn't you be excited about potential revenue into your, but, at the end of the day, it was just someone's pipe dream. They didn't have a full team to execute that dream. And that's where people get hurt. Oftentimes too, on a lot of syndications is they're syndicating with an owner builder type or owner developer, and not necessarily a team or a company. That's another risk mitigation component when you're getting into passive investing, because when you have someone that's controlling all the money, all the decisions, and there's oftentimes during this process that, let's face it, we don't have a lot of good actors in some cases, right? So they take advantage of people. And they steal money, and some of these people are in prison now. Some of them are not. But, it's understand who you're investing with, understand the team that's back behind them. Do they have the full capability of being able to support the development that they're doing? Or are they selling you a pipe dream? Because if they're selling you a pipe dream, most likely it's going to be a waste of time and a waste of your money.
Excellent advice. So if you're an investor out there that's wanting to invest passively, due diligence on the operator and their track record, their team. And after that, after you've done your due diligence on the operator and the team, then make the investment, and then you're rest assured and you won't have to manage anything. So that's the idea.
I mean, at the end of the day, anytime you invest in something, right, and anything that has a certain amount of return aspects to it, there's always a risk that's going to be involved with it. But the beautiful thing about some of the passive investments in the vehicles that are out there is your investment is secured by the property itself too as well. So if the investment was to ever go defunct, at least you have some kind of holding that you would be able to at some point either recoup all your money or recoup a portion of that money back. So that's another important factor that you want to look at as a passive investor too, as well as how is your investment being secured? Is it you're just giving money away, or is it going to be secured with some type of an asset?
Excellent point. Excellent. So I think we've given some good nuggets here to our listeners about land investing, and enough to spark their interest to learn more. So I guess through the investors out there that are ready to dive into active investing, reach out to Tony. I'll leave the link to get in and contact Tony in the show notes below. But if you're a realtor out there wanting to get into commercial real estate, reach out to Tony, and an investor wanting to actively buy, reach out there. And then also, if you are ready to invest passively into land, we're going to be offering some passive investments to land development. And so click on the link below in the show notes and you can be added to our investor list to be notified when we have deals come out. And then obviously, click on the link to download our book on diversifying your commercial real estate investments, where we go into much more detail with the data, analyzing the three different buckets of commercial real estate investing. So Tony, any last words for this episode?
If you're not invested into real estate, you should be. Honestly, if you're truly serious about, think about majority of the people in this world. Well, let's just say the United States, right? We're investing into 401ks. We're investing into intangible assets, versus real estate is a tangible asset. At the end of the day, you can touch it, feel it, smell it, do everything with it. It's really, a really safe harbor to a certain extent of an investment, and you can utilize different strategies. We're entering into a period within our economy, whether we're in a recession or how deep that recession goes. These are great opportunities to start getting into, especially when you have the stock market so volatile. To be able to take some of that money and diversify I'm not saying you pull out all your money out of all your investments and just throw it into real estate. A smart investor is going to have a very diversified portfolio. You're going to have some stocks, bonds, and then you should have real estate as part of that outside of your primary residence. Because, let's face it, our primary residence is just a place that we go and, is our home. That's where we're living. That's where we're sleeping. It's where we go and lay our head at night and break bread. But income producing assets is a true investment, right? And that's kind of one of the things that always has bothered me about the real estate community is how they talk about owning your own home is an investment to a certain degree. But if you run the numbers and you're doing a 30-year amortization loan and you look at your numbers as far as return on investment over that long of a period of time, granted, if you take it a cash on cash return on investment, okay, but you're putting in money year over year over year. In essence, in a 30-year mortgage, is you doubled what you paid for that property over that 30-year period of time as you pay off that house. So, and then people with equity, that's money that's just sitting there and that's not really, it's earning, valuation with appreciation, but you could also take that money and place it into something that's going to work for you. And real estate's a great vehicle to do that. Excellent
last words. And I really like how you spoke in there a little bit about the market's shifting a little bit. And in these next couple of years, there's going to be some really good buying opportunities, especially for office and retail as well. And so, let's do, Tony, we'll get to do another show where we talk about office and maybe one on retail. So, if you haven't already, subscribe to this podcast, like it and share in the whole 9 yards. But that's a wrap for this episode. So we'll stay in touch. Tony, thanks again.
Okay. Thank you, Jeremy.